After disappointing news from the CPI, the market is acting extremely weird. It's very hard to understand what the market is doing this morning. We've got the Dow way down, got the NASDAQ a little down, you've got Tesla a little down, and you got the bond market flat after being down, meaning interest rates or yields were up, but now it's come back down to flat again. Anyway, we'll talk about all these details and a lot more as we go through the process this morning. So where do we start? Well, we start with this from Tesla Chan. He says that Elon is expected to visit China once again. Well, of course, obviously, I think that Elon would want to get back to China probably once or twice a year. It is his largest factory. It is doing extremely well, but it's good to go over from time to time and cheer the troops and possibly get some meetings. Here's what I think he would be doing, and primarily, if he's going to be over there, one of those things would be FSD negotiations with the government. You know, how are those progressing? How are they going? He may want to go over and have some conversations with those folks himself outside of his regular negotiators. And then there would also be, I think, a real chance he'd want to talk to some of the OEMs over there as we get closer and closer to 1010 to see who is and who isn't interested in FSD licensing and other licensing of Tesla products and capabilities like the operating system, whatnot. Anyway, those would be my thoughts with regard to his trip to China. AJ this morning has this recap. He says, let's recap what's happening right now while looking at this. Well, we don't have the chart. Tesla is the clear global BEV lead, and Tesla likely reports an all-time best or almost best quarter in the third quarter based on quarter-to-date reported deliveries. BYD is the only company close to Tesla in terms of unit BEV sales, but not even remotely close in terms of BEV revenue. The attached BYD, well, we don't have the chart here. Anyway, VW is in deep trouble. It's all over the news now. And as he predicted last year, VW can't keep up with Tesla and BEVs, and VW has already scrapped various BEV programs. BMW 2 is in trouble. Stock is down 11% yesterday. And the ad hoc announcement that BMW expects to sell fewer cars in 2024 than 2023. Hence, BMW is also no threat to Tesla. I warned 6 months ago that their financials were much worse than what the headline suggested. And then Geely, a major company over in China, Geely is ultra low profitable, controls various entities which are in deep trouble, including Polestar, Lotus, and Volvo. In Geely's key Chinese market, Geely sells almost 30 different BEVs, but makes barely any sales of any of them. All of them are underperforming products, hence Geely is no threat to Tesla. Stellantis is burning cash and also cut back on EV programs since it simply can't afford the cash burn. He says the remaining companies, Mercedes, Hyundai, Changan, NIO, etc., are also so small that they don't even play in the same league. Bottom line, nobody is catching up with Tesla. Any catching up that was done was on the back of a giant, unsustainable cash burn and massive discounting, especially on fleet sales. The end of this has already started, and it wasn't sustainable. However, this also means that the end of the ice age has been delayed. This is me speaking now, I'm sorry. This also means the end of the ice age has been delayed. There is just no chance that the needed vehicles can be manufactured by all these other companies. It can't just all be Tesla and BYD, and there's just not enough time now to ramp by 2028, which has been my year for the ice age to be over. Now, the ice age might end up being over, all but the shouting by the end of 2028, but it's not going to be where we have no manufacturing or virtually no manufacturing of ICE vehicles. So I'm saying that if Tesla gets close to 20 million in 2030 and BYD is still close to Tesla, meaning maybe they're at 17 or 18 million at that point, that would still only be half of the needed vehicles. And I don't think the rest could come up with another 40 million. Okay. Interestingly, as I discussed with Nicholas last night, the interesting thing is that the end of the ice age might come as a result of automated vehicles, not really just as a result of electric vehicles. This is also from AJ. He says, Tesla was only 6% below BYD's China EV sales revenue in the month of August, total revenue, even though BYD is selling 18 models versus Tesla's 2. Additionally, not even BYD's best-selling Seagull, with 493 million in estimated revenue, comes close to the Model 3's 675 million, let alone the Model Y's 1.8 billion. He says, he says he's going to post some more insights on China, and I have subscribed to him on X so that I can make sure that I bring you anything that he brings out. Al Root, who's now doing this daily, apparently, update on Barron's, thinks that the Tesla is now range-bound on the stock and needs to get above 250 for a breakout. Mario Nofal says this morning that Grok is elevated far above other AIs. Wow, this is from 618 Media. Grok offers exceptional efficiency and adaptability. It makes Grok more effective in understanding and generating human-like text, setting it above ChatGPT. Now, that's just 618 Media's opinion, but what the heck? That's good news. All right, this is Randy Kirk. Of course, like and subscribe and notify. And then later today, of course, we have Scott Walter, followed by, Jeff Lutz on Good News Wednesday. The Consumer Price Index, the big disappointment today, the Consumer Price Index for all urban consumers increased by 0.2%, which is exactly what was expected. That's the same increase as it was in July. And then over the last 12 months, 2.5%. Now, as I've said before, this is a fine number, but this is the headline number. This is not the goal. This is not what the Fed is looking at. All right. 2.5, though, good number on the headline, although it's still a lot. It's not like it's, a great news. 2%, according to the Fed, would be great news, but let's remember that 2% is on top of massive increases over the last 3 years, which have got a lot of consumers scrambling to pay their bills. So the index for shelter rose 0.5% in August, and that was the main factor in the all items increase. So it continued, of course, we're not surprised. We're seeing the price of housing and apparently the price of rentals also be up. The food index increased only 0.1% after rising 2% in July, but the index for food away from home rose 0.3% over the month. And the index for food at home was unchanged, actually. And although certain food categories, went crazy, but the overall index was there. The energy index, of course, fell 0.8%, which is why the headline number came in so good. Now, if you take out food and energy and you get to that core inflation number, it rose 0.3%, and that's why stocks are down. 0.3% is expected to be 0.2%. Annualized, that's 3.6%. That is nowhere close to what the Fed is hoping for or expecting, and this is the one that the Fed pays the most attention to. Indices which increased in August included shelter, airline fares, and motor vehicle insurance, also education and apparel. The index for used cars and trucks, household furnishings, and medical care, communications, recreation were those who decreased. Those are the ones that decreased. Medical care decreased. Wow. The all items index rose 2.5% for the 12 months ending August, which is the smallest increase since February 22, but the all items index, less food and energy, the core, rose 3.2% over the last 12 months. And so the energy index decreased 4%. The food index increased 2.1 over the last year. So even though the last month was okay, over the last year, we're still looking at 2% for food. The big move in shelter continues to be the one confounding. The cut in interest rate, it's problematic because the cut in interest rates, if it had been made 3 or 4, 5, 6 months ago, might already be starting to impact housing starts, might already be starting to impact the price of housing, letting it at least moderate. I don't necessarily expect it to go down. It might take years before it goes down, but at least the index, if we had the interest rates coming down, It would allow home builders to start building again. It would allow people that need a home to start contemplating buying one. And you might begin to see a little bit of moderation in the price. Anyway, this whole thing is a setback for sure, and the market is responding as such. Will it take the 25 basis cut off the table? Probably not. The Fed is probably still going to cut 25 basis points, but I think this does eliminate the 50 basis point cut. From Barron's this morning, in a research note published Monday, Goldman Sachs said, while stocks are likely to post further losses over the rest of the year, I think they're going to post further losses and then regain those losses, but we're not that far off in our opinion. The risk of a bear market, meaning at least 20% down, remains low. It's Goldman Sachs pointed to a limited recession risk, strong private sector spending, really, and looming interest rate cuts as the factors that can support equities. Strong consumer spending cannot last. We think the risk of a bear market remains low, with relatively low recession risk helped by healthy private sector and central bank easing. The benchmark S&P index is currently down about 3.5%. That was before today. But how about this from the Globe and Mail? Piper Sandler strategist Nancy Lazar is expecting a U.S. recession. What is cyclical employment? It's payrolls minus government, healthcare, and education, totaling 78% of all employment. So 78% of all employment is the total number. So you take off 22% for government, healthcare, and education. Last month, that number fell by 58,000. That's a cumulative 271,000 since the May 2023 peak, and is declining at a quickening pace. What does that matter? Well, going into the last three real recessions, 1990, which is a very short recession, 2001, which is a steep but short, and 2008, which was really bad, cyclical employment always turned down before headline payrolls. Net only healthcare services, government and construction are net. Boy, this is a weird sentence. Only healthcare, government, and construction are boosting payroll employment. And construction is mostly coming from government jobs. And the lack of breadth is not a healthy labor market signal. Between the higher funds rates and the tighter bank lending standards, broad revenue risk is declining significantly. Cyclical jobs are down because broad revenues are faltering on the long-lagged impacts of Fed tightening. One, aggressive Fed tightening is slowing corporate revenues, pressuring cyclical employment, then increasing the unemployment rate. Looking back, whenever there's been a tough Fed tightening, there's always been a recession. Not to mention this cycle is 20% Fed balanced sheet contraction. Well, there you have it. This is pretty close to my analysis. This is not 100% where I'm coming from, but it's very, very close to I believe we're already in recession. All right, so let's see where the markets are. As I said, it was very bizarre earlier, and it hasn't changed since. You've got the Dow down 585 right now. You've got the NASDAQ down only 68. You've got the S&P down 54 and Tesla down $4.41, which is pretty, not that, I'm sorry, that just, everything just changed. My system had to update, and the numbers have changed pretty radically. The Dow is now down 666, 665, 77. The NASDAQ down 124, S&P down 66, and Tesla's now down 6. That's more in line with the other numbers. You've got the rest of the Magnificent Seven, except for NVIDIA, all down. NVIDIA's up 88 cents. You've got all the Cathie Woods down. So what originally had started out to be a very, very weird market with the Dow down dramatically, but the NASDAQ not so much. Now the NASDAQ is catching up. And now I will also say, however, that there is some bit of a turn, but not much, just a little bit of an upturn at the bottom of that of that, of the crashing number as we're looking at it right now. But no, I think the market has definitely decided this was not good news this morning. The 50 basis, I'm telling you, the 50 basis points is not on the table anymore. 25 basis points still likely, although there's at least a chance that this will kill the mood of the Fed. And I think that's being played out right now on these numbers. I'm sorry, I almost didn't do the percentages here. What we've got is the Dow down 1.69%, NASDAQ down 70.77, S&P down 1.3%, and Tesla down 2.74, very much in line with the normal as it is just involved in the macro this morning. All right, let's go ahead and take a look what happened with the bonds, which had originally been actually yields had gone up on the 30. Okay, but now they're down. Interesting. That's so interesting. So this would suggest that the bond market is believing that the 25 basis points is solid, and they might even think there's still a chance for the 50. That's what the bond market would be telling us right now. So you've got the 10-year down 1.3, but you've got the 2-year actually up, call it unchanged, 1/10 of 1 basis point. But that brings them closer together again at only 2 basis points dividing them. But the 10-year is at 3.629. Let's call it 6 point. Just changed, in fact, 3.63. So interesting, super interesting this morning on bonds. All right, let's go ahead and look at oil. Now, the oil market is being impacted by the storms in the Gulf. So up this morning, but not as much as they were. So the storms in the Gulf, either we know something, maybe the storms in the Gulf are not going to affect production after all. I don't know. All I can tell you is oil is only up 58 cents in the Texas Intermediate, 40 cents in Brent. Keeping us still under $70 on Brent, and Texas Intermediate $66. You've got natural gas rebounding after being down yesterday, back up to the $2 and almost 30 cents. You've got gold down 9, but so right in that range. Been sitting in a range above 2,500, but not getting back to all-time highs. Silver, same thing, right in the middle of this range, around $28.50. Copper up this morning, 0.52% at 412. Again, pretty much the same as what we've been seeing. The dollar down against the Japanese yen, 0.65, against the euro, 0.11%. Bitcoin losing the gains from yesterday, down 1,821 right now at 50, call it 56,000 would be close enough for government work. Okay, you've got the, oh yeah, that's it. Okay, so let me just, I'm gonna go ahead and give my quick impression. Didn't write it down, just want to give you my quick impression of the debate last night. I believe that ABC was the big loser. They fact-checked Trump repeatedly, 11 times. Kamala Harris gave absolutely complete lies that had been, that nobody on earth at this point believes anymore, like Charlottesville, like that Elon, that Trump will do a federal ban on abortion. All lie after, I mean, these were not like maybe close calls. These are things that Snopes had said months ago were lies, and Kamala continued to just put them out there like they were absolutely true. Zero effort to fact check her. 11 fact checks on Trump and none for Kamala. It was a disaster in terms of ABC's approach to the debate. You have to give Kamala props for being prepared, for doing better than expected, and also for being slightly more strategic than Trump. Generally speaking, at the end of the debate, everything that I've seen is that Trump won in terms of the most important thing, which is bringing people to his side. He lost in the what do you want to call it? The betting sites, which would indicate that the folks that were watching it betting about how the race is going to turn out hedged their bets and went over to Harris quite a bit, actually. But the folks everybody asked to see, I can't find any evidence that people say, well, as a result of that, I'm voting for Harris. No, it seemed like as a result of that, I ran a poll, there was other polls that I saw on X. Now, X is probably, pretty right wing, but one of the polls I saw suggested it was like 88% said that Trump won the debate on what? On the reality that we need to have his kind of approach to governance, not hers. Okay, so that was my quick take. All right, reminder again, Scott Walter later this morning, Brad Ferguson. Did I say Brad Ferguson? It's not Brad Ferguson tonight. It's Jeff Lutz tonight. Jeff Lutz will be giving us the good news. I think by the end of the day, Tesla could be back in the green. I think that it won't necessarily follow the market around all day. It might get some life of its own as we get closer and closer to 1010. That's not a prediction. That's a possibility. All right. And then, but anyway, we'll have Jeff Lutz on. And then please take a look at the video yesterday with Brian White. Again, he took us up to that Electrify Everything show up in Vancouver, and I think you'll enjoy some of his observations from that show. All right, that's all I got right now. We'll see you later today. It's been great talking to you.